Good morning, everybody. What's up, guys? How we doing? Was it? Did you like the whole intro I did? That took me a little while to set up. I automated it. Pickle. What's up, man? What are we going to talk about today? The fact that I can't find a decent espresso grinder under $650. The fact that I spend $650 to grind beans. Waiting for Monday. Yeah, the weekends are always the worst. I agree. It's your birthday. Well, happy fucking birthday, Monkey Danja. Missed it. You know you can just start the stream from the beginning, right? Your thoughts on the NSCC filing? Which one? Holy Saber. There have been a few this week. The one where they're covering their asses, or the one where they're really, really obvious about covering their asses? Awesome, Castellasaurus. I'm stoked. Good afternoon, Starlight. It's Monkey Danja's birthday. Woo! Reddit making a big deal of it. Lots to unpack. Reddit's always making a big deal of everything. And usually they're making a big deal of nothing. Let me take a look. God, I don't want to go there. I was having such a good day. Okay, does someone want to like real quick DM me this thing? NSCC 803 SFT loans to prop up market to avoid fire sales of other securities. Oh, so they want to pay us off over time? See, what about next week? New head of the SEC. He's supposed to be an enforcer. He's not a new head of the SEC. He's a new enforcement officer. I mean, how to explain this? He wouldn't be there if he could do his job properly, right? Like that's not how these things work. Like corruption breeds more corruption, right? So like you don't put a guy in a position like that who's not going to like toe the line, you know? Don't trust these people and like new appointments. They're the same fuckers that got us into this position in the first place. There's no white knights in shining armor fucking rolling in to save the day. That's not how this works. I know like every time some new person pops up on the scene regarding this, everyone's like, "Is this the one?" No. They're not. Seems like a way to elongate MOS. They could try. It seems more of like a way to try to set us up to take an offer. So be listening. Have a great day, everyone. All right, Charlie. How the debt ceiling is? They've raised the debt ceiling so many times in the past. Tickled pickle. This isn't like an uncommon occurrence for them to raise the debt ceiling. Let's see, what was the last time it was raised? I can't remember. It's been raised 74 times since 1962. It's not a big deal. What it could do is propel the already bullish sentiment in the market literally into the stratosphere. It's going to be like the 90s all over again. I'll have to look into it more. Holy. I read some of Krian's SFT, like DD. He's not entirely correct on how those those parts work together. I'm also kind of suspicious of the Citadel Connect thing and the attention that's getting. So I want to look into that more this weekend as well. I was going to look into a lot of this stuff last night, but unfortunately I spent the night in the ER. So haven't been able to watch the stream this week, only listen in. Oh, thank you, Chris. I appreciate that, man. Take what kind of offer? Who the fuck knows what they want to... I mean, if it blew out of proportion, they would try to buy people out, right? Possibly. They can pack that into loans and then sell the debt. It diffuses the risk, right? So if you can pack 60 trillion in losses into long-term debt, right, and get the taxpayers to pay it off, that's a much better proposition than just like the DTCC going under because of a short squeeze. Anyone else see the DD about junk bonds? No, but I'm actually interested in that one. Danja, DM me that if you have a link for it. I feel like junk bonds would be more tied to this than RRP. My roommate ordered food and got me Domino's chicken wings because she knows I hate the pizza. The wings are absolutely disgusting. They always have been. You gotta really like waterlogged, wet wings that are moderately warm from some sort of mutant chicken that's 8 times the size of a normal one. Sure, it lets hedge funds loan other securities to the NSCC for cash to close out shorts, which then get fortified if they default on loans. That effective. Yeah, so like I said, it diffuses losses. Disperses. You don't order anything from Domino's. That's the whole sentence, Starlight. You didn't need to add an addendum. You okay? Yeah, I'm alright. It wasn't for me. A relative of mine was having heart trouble. Everything's okay though. It's all fine. I see a lot of talk about some FDs on open, thinking there will be some parabolic movement as well. Risky gamble or no? I mean, those aren't really FDs if you're buying them like Monday on open, right? Those are just weeklies. Weeklies are only carry risk. Ooh, I get to do things with my Epic Pen now. So generally, this is how most stocks with options chains will trade, is that like Monday. No, it's not working. Of course not. Why would Epic Pen ever work? You see that? Okay. Monday and Tuesday, the markets are more bullish, right? Depending on if there's a Monday dip or not. So Monday's either red or it runs. And then Tuesday's usually bullish. Wednesday is generally neutral. And then Thursday, Friday are controlled by Max Payne. Now, while I don't like the terminology FD, let's call them 0 DTEs. These are bought Friday morning in the hopes to sell them before close on Friday, right? So this is a Friday movement. The best way to play these as a trader is to buy them on a stock that is below its max pan. Because then you're buying on the side of the market maker, right? So like say max paying on a security is like $55 and the stock's trading at 43, right? This is an excellent like arbitrage opportunity between you and the market maker. Sort of like the people who bought you guys can't see that, can you? Sort of like the people who bought the in the money options yesterday, the 175s at, I think they bought them at like 200, right? And those went up to like 400 or 500 by close. Maybe more. Probably actually at their peak 600 something, those contracts, right? Because Max Payne was at 180 and we were trading at 175. So there was an arbitrage opportunity between the market and the makers. So that's actually like, I know how Wall Street Bets plays 0 DTEs, but they're wrong, right? And then if you're buying weeklies out here for movement, you're looking to trade those into Wednesday's neutral action, right? So Wednesday is your determining day before Thursday theta absolutely destroys your contract. So you either go up or, down over here. And so if Wednesday is a more down day, you get out of your contracts or roll them right into the next week. And if you're up, you sell. Then if you expect further movement that week, it will probably occur on Friday and you can buy 0 DTEs. Yeah, everything's okay, guys. I promise. You said the effectiveness of shorting is getting less with time. The stock is becoming a liquid. So previously, when the stock got to 340, they smashed it down. Okay, so the stock got to 340 in January. They smashed it down, right? And then it went down here, and then it went back up and tested 350 again in March, right? And they smashed it down. And then we fucking traded sideways, and then it ran up in June, and they didn't smash it down this time, interestingly. GME sold 5 million shares almost immediately on the market, right? By Monday open, they had begun selling shares, or the next day, they had begun selling shares. And that brought us down to here, where we're now bouncing. So the last time they didn't smash it down, GameStop stopped that run up, and they stopped it quickly and effectively. At the behest of the SEC, that's hard to say. There's nothing on the screen. Yes, there is. Wow, there's like not that many people in here today. Maybe I should have opened it up to the pores again. What do you guys think? No. Didn't the Fed buy 20 billion of HYG over the last year, bailing out corporate junk bonds? Probably, as they didn't want the economy to fail. I'm sure a lot of the propping that we're seeing done in the market is being done by the Fed and their asset allocation programs. The term is used pretty loosely, Cool Daddy. But each day of a weekly carries different, like you're paying different amounts for theta, right? So narrowing down your window of movement is very important when playing weeklies. Most weeklies are a loss. You will see me buy weeklies all the time and just lose money on them, but I expect them to be a loss, right? Like it's just that the ones that pay far, and back when I had like the two, what was it, the 200s on GME in June, like those printed, I think each of them printed like 2,400%. Oh, and those 716 800s on that run up. So when you do win on them, you win big, but you have to be willing to like risk capital in them, which is kind of the problem with them, is that if you don't have capital to risk, it can become a very short cycle of you playing them. Yeah, it's just a misconception, Cool Daddy, and how they handle them. They just YOLO money into shit. They don't care how many days to expiration. The cheaper the better. They're all about like quantity of contracts over quality of contracts. No, lol. Why is everyone saying no? let's talk turkey. What can you do about a list for all the new people that come in asking the same questions every day? Maybe a Reddit post that you can pin and refer to? Possibly, but the same question they ask every day is different every day. And that just gives you like more shit I have to keep track of, right? And it removes the personalized experience of me answering stupid questions, which is also, part of the reason all of you are here, is because at some point, almost all of you have asked me a stupid question and I've answered it for you. So I know it can get annoying at times. And that's part also of the overall goal of the channel, is to bring more people into, the cult or the fold or whatever you guys want to call it, the stock. It's like a 7-day a week running ad for GameStop, right? But yeah, it's different shit every day that they ask about 500 times. And there's no one who's not guilty of it. Except maybe the people that listen in and don't really participate in the chat. DM the junk bonds DD to you on Discord. It is marked Theory DD, so not too sure of its importance. Okay. Sometimes those are the best ones. Thank you, Monkey Danja. I will check it out. Or do you think GameStop didn't announce the end of the latest at the money offering like they did the previous one? They did. Snoozy Pooch. They announced it. They announced it big. Do you have an opinion on TTM trend candles? They're all right. They throw false signals though. I really don't like indicators that are prone to false signals. And since they're essentially like candlestick reading, like Heiken Ashi like shows you trends, right? But it doesn't predict them. Like it just kind of shows you the possibility of them based on volume and volatility. Whereas like that's more trying to like do short-term TA on 6 candlesticks. And I don't really know anybody who's super successful with candlestick reading. No to the pores. All right. You need a personal assistant? I probably do, but unfortunately, that's not something I can afford right now. Maybe when I have like 100,000 subscribers, I can hire somebody to do shit for me. Thoughts on expansionist actions of China will affect the market, military and industrial complex boost, bear sentiment in the Japanese market due to possibly facing war and nukes. Okay, first of all, no one's going to use nukes. It's not going to happen unless somebody truly insane is in charge, and then other truly insane people are in charge. It's not going to happen. But yeah, I mean, any large scale military action will have a massive bull sentiment in the markets. The markets love war. The military industrial complex funds so many fucking industries. All of them. Every industry makes money off of war. bearish sentiment in the Japanese market. I mean, there's and unlikely. Japan has allies, you know. Japan probably doesn't. Not as much of their economy is based on the military-industrial complex as like they won't benefit as much as Europe or America, but you got it, Starlight. And if anything, yeah, answering those questions all the time just really drills shit into the heads of the people that are already here, right? I will say it does take a lot of fucking patience sometimes, but we take Sundays off for praise. All you need to answer is win moon, plain and simple. If I knew that, I'd be a much richer man. Thoughts on Jimmy for the next week? Anything you see that may be pretty positive on the chart? Yeah, so we could take a look. I mean, I'm gonna do my forward DD, but we can get like a general gist of it. We had a crossover on the MACD yesterday, which is significant. We'll see if it holds Monday, but if it does, it's very significant. A lot of algorithms buy in on like daily MACD crossovers or longer term MACD crossovers. A lot of institutional traders will buy in on that crossover. It presents it's a pretty strong buy signal for the market. Let me see here. So if we look, we came down and hit that trend line again and began bouncing. So either this bounce carries us through. So this orange line here, this is weighted VWAP. So this isn't the same as the VWAP we see on... oh, shit. It's not showing up. Hold on. There we go. So this is weighted VWAP. This isn't the same as the VWAP we see on stream. This is weighted to a date. I believe that date is 2/24. I did that to drown out the noise from the gamma squeeze in January. And as you can see, our VWAP is kind of just at 180. It's at 177.33. And so this is a much longer term weighted average price than what we see on the stream every day, which is an intraday, 14-day trailing intraday weighted average price, right? But we did bounce off the long-term trend on Friday. I didn't expect us to sink back down to it, right? Like, this is where they suppressed us the strongest. We probably should have carried up on that first bounce initially when we actually had some volume. But what's weird is in this whole time frame, all the way back to here, we've traded about the same volume as like 3 days and like 3 days of our average volume traded, right? And so if we zoom out, like the breakdown of that cup and handle was so slow and weak because of that low volume. Like if we'd had higher volume, we probably would have stayed closer to the original trend, right? Instead of having this breakdown here. I appreciate you going. This is not joke. We're talking life-changing money. People need to be prepared. I agree. I still Can we do a Sunday stream where you read Crane's DD in a wizard's voice? Witches read candlesticks or something. Could ask them. No. Oh, is slow chat on? Slow chat shouldn't be on. Hold on. Yeah, slow mode's not on. Japanese market goes down when it rains, so I'd be bearish too. What's up? We kept on checking. Plans for the stream after MOAS? I don't know. We'll see. Probably do something different with it, right? No, this is the... There we go. We talked about quarter end and Fed releasing public infos. Those are self-reported, so I highly doubt they're going to reveal, you know, their short position in that report. Quarter end is interesting, but we have quite some time till earnings. I think earnings are out here on the 26th of August, if I'm not mistaken. So, here's what I'm concerned with is if, like, here, let me use the forecasting tool. Is that what it is? Bars. There we go. And let's go from, what does that look like? Here. So there. To there. So if we repeat the price action from the previous run up, which is, you know, obviously inaccurate, but I bring that out to earnings. What I'd be worried about is if we followed this, right, this lower trend up to 350, earnings happens and they sell more shares. That would super suck. So I hope that doesn't happen. Ideally, we follow that pattern more strictly, right? And we look for, oh, hold on. Are we going to break out around there? Right, on the 10th? That would, because if we can break 350, it's very likely that we test like 480 and then move up. So ideally, something happens before earnings, right? Go away, stupid pen. Where was I? My connection is so bad on this ferry WA, but I wanted to say I volunteer as tribute for personal assistant. I'm pretty great at that job. I'll let you know, Han. Thank you for the offer, though. Yeah, I know. Sometimes the older members kind of handle the questions in chat, and then I can ignore it, you know, which helps. That's a huge help when you guys do that. Obviously, you don't have to, but I do appreciate it. My wife is constantly like, I don't know how he can field questions and explain stuff all day. It's impressive. So I think I lost her to you. Well played, sir. You can have her back, man. That's. I'm not trying to short your marriage. This bouncing triangle of death guy. I fucking loved that post so much. And the thing I loved about it most is I don't think it was ironic, right? He was just like, this is the wedge. Let's go. Any luck on finding a new screener? I'm still using FinViz. I wanted to take some time today to try to do it, but I don't know. It generally takes a lot of research to find a new one, and I'm still really pissed off that my old one was not performing as it once did. Oh, just so you guys know, algorithmic automated screeners are way better than manual ones, because manual ones limit the range of things you look at in the market. But it's like you have to find a good one, or you have to get one made for you, and that's difficult. Too powerful for slow mode. Yeah, you shouldn't have slow mode. It's definitely turned off. I don't turn it on these streams because the chat goes slow anyway. Post MOAS cement conglomerate. Maybe. We'll just buy out the cement industry. We could become the mafia of cement. No one can buy cement except from us, and then we can price fix it. That'd be fun. The last pattern seemed to be speeding up before the bottom. That's how I came up with the 6th and pushed it to the 9th, because Fridays are terrible for GME. Fridays are terrible for GME for a number of reasons, but yeah, they are. Also, there's a marketing team and I didn't get invited. Oh, do you want to be on that? I can add you. Just DM me again. I know I missed people. You got to understand that even on Discord, I get like 50 messages a day, and it's hard for me to like then track the message over time. Smash the likes. Yeah, so make sure you guys get all the likes down. For this private stream. Do you think the government, SEC, or both are pressuring GMU to offer more shares? I think it could be the SEC. I think this share offering was the SEC. GameStop already had $600 million going into this. Ryan Cohen has shown no desire to release shares at any other point all the way back, right? And like, yeah, he officially became chairman on this day, but that's not why the shares got released, right? Like, he could have made George Sherman do it ahead of time. It can be a technique. I think the SEC's pressured share offerings in the past. I don't think it gets talked about a lot. But not necessarily the SEC, right? It could be like the U.S. attorney. You don't know how many agencies are involved in the investigation, right? Like, it's an SEC-led investigation, but that can mean ask anybody in government, that can mean multiple agencies are, cooperating together on it. How many times can GameStop release shares? Is there a point at which it lessens the impact of MOAS or invalidates it? Not really, because like GameStop's released 8.5 million shares this year, and on the very lowest estimation of short interest, it's at like 226%, right? Which is, you know, like 240 million shares sold short, roughly. It's more than that, but I don't feel like doing the math right now. Was the change in the scanner on their end? Oh, so they did like a massive marketing campaign and got like 5,000 new subscribers, and the scanner just got front run everywhere after that. So it was just, I just got out of it. That's another problem with scanners. If too many people are using the same one, so you got to find one that works well and isn't popular. I like Mexico. I've been there. I can say that some parts of it are okay. You wouldn't get me back in Tijuana if you paid me, though. 350 this time and sustain it. Is there any way short hedge funds can be covering to 350 then shorting in a cheaper fashion, like through ETFs, creating a cycle of mini squeeze? Here's the problem with that, Duke, is if they're banking on people. So at 350, a couple things happen, right? So when we hit 350, bag holders that bought in at 350 and 300 are selling, right? This happens, or whether you guys like want to believe that or not, it's true. And that's happened here, and it happened back in March, and it happened in January. People who bought high and have been, negative for this entire period of time, right? Sell, right? They sell at those intervals. That's why you have a resistance there, right? So they short that, knowing that it's a high psychological resistance, and people will dump some shares. So shorting is effective at that point. That's the reason a cup and handle plays out, right? Is that you have 3 tests of the same resistance, and then on the last one it moves through. Because there's the bag holders get out here and here, and then on the third one it runs up. So this will be our 3rd test since January, but technically our 4th test of that resistance, right? Whenever we hit it. What was the second half of that question? Hold on. Shorting through a cheaper. It's not cheaper to short through ETFs. It's more liquid, but it's not cheaper. It's the same price to short through an ETF. I mean, there's some arbitrage opportunity, but it's minimal. No downvotes today, bullish. So ideally, when we test it this time, the only people left in the stock are like long-term apes, right? Let's call them LTAs. And it will push through as we have seen in this cycle, that our floor is very stable. These weeks represent like $7 billion in short action between the GameStop and its surrounding ETFs. And they've only managed to push the price down barely $50, right? And that was with the at the money offering, which ended here, right? So even less price action. People are holding. They're holding. No one's selling. You can see it represented on VWAP in the fact that as we went in to that period, there was just some FOMO, right? People were still FOMOing in. That's why our weighted VWAP actually moved up. So weighted VWAP should be pretty flat, right? But it moved up because we had FOMO here. And then since that FOMO, there might have been some selling in this range, right? But most of that's just the share offering. And then from here to here, nobody sold like a fucking single share. It's flat and it's slightly inclined, right? Which means that, apes are doing what we expect them to do, which is buy more shares every paycheck, or, every time they come into a little money, some of it goes to GameStop. So, given enough time on that rate of increase, VWAP will just slowly trend up, right? So no matter where you look, there's a countdown on their position. I guess that's what I'm trying to explain. Any thoughts about July 30th? Okay, so I talked about the Federal Reserve. The derivative exposure is self-reported, so we'll see. I don't know what the requirements for their reporting are. Like, it may be self-reported but extremely strict, and they do have to report their positions. But I'm sure they will do anything in their power to not report an active short position, right? Because if they ever reveal their hand on this, they will get squeezed out so hard. So a lot of the reason institutional investors don't get in is because they also don't really know, right? Like, they don't know the exact breadth of the short position. And if they did, there's enough funds who don't give a shit if they start MOS that they would squeeze them out in a heartbeat. So we'll see. It's interesting. It's another date, though, right? It's another governmental action. So don't put all your hopes and dreams on it. Share offering doesn't really affect a whole lot other than just sell pressure, right? The float is owned probably twice over, so it doesn't help the short hedge funds that much. Yeah, no. It helps a little. I mean, they could probably, like, with the 8.8 million shares they've released this year, they've probably been able to effectively clear, maybe, I don't know, maybe like 32 million of their short position. But, that's a drop in the bucket. Have you ever seen a recruitment spree of high up industry execs into one single company similar to what GameStop have done in a short period of time? Ray, all the recent hires from Amazon, Chewy, etc. I mean, do more research on this, people. Not all of them are like fucking rock stars. Some of they're decent. They're a decent executive staff team. It's interesting that he chose them all from Amazon. You know, I'm sure Ryan Cohen has access to extremely good recruiters, and he's offering lucrative terms. So it's not that unusual. It's definitely something that you need to do. See, what is unusual is companies being turned around successfully. So if that's his plan, he's doing it right, right? And that's good for us in the long term, as that will drive investor interest more than anything. It's just, the long term investment case is probably one of our strongest tools. I meant how the strategy relates to the company it's revival, not the short squeeze play. Hold on. I'm not. You want to repeat the question because I can't find it. Cool, like the original question. How much deeper in short interest percent do you think they're digging on daily, weekly basis? It's about depends on the week. Some weeks are heavier than others, but it ranges from about 6 to 14% every week. I've always suspected people asking us to pick them up or selling when we hit their point. I mean, yeah. Like a lot of you guys are in below 180 or have averaged up around 180, right? As we know, this is our volume weighted average price. This is where most of the shares, this is the price point most shares are owned at, right? So most people are neutral, positive in their position, right? Positive. The vast majority of you guys, positive or neutral, right? So they're like either up or just flat in their gains. Those people at 350, especially the ones who held through March, they've been net negative for months. And some of them will hold, right? Because some of them, but that is very psychologically degrading. Generally, people that are bag holding, which is what that is, and they follow that mentality, will sell the second their position's positive. But it's okay. There's not a lot of apes that high up. It's minimal. It's a dog eat dog world, and short hedge funds are wearing bacon pants. Random question: is the continuing lower volume every day mean the new rules have actually started to affect the shorting? Possible. I mean, for the last 2 weeks, all we have seen really play out on the stock is significant shorting vis-a-vis the options chains. But the problem with that is that the run-ups come faster. So when you short in the traditional method or using, synthetic shares, you can hold that position, right? Especially at the borrow rate right now, you can hold that position a long time. It might be negative. It might cost you money to hold that position, but you can hold it all the same, right? With shorting through the options chain, those market makers they're gonna remain delta neutral, right? So when their gamma exposure becomes too high, they're going to correct that. And so like Monday and Tuesday, we will see market makers buying back into the stock, right? Because they're not going to risk their gamma exposure for a short play by someone else, right? And so it shortens the cycle at which the FTDs flow through, right? And shares have to be covered, which means that we will possibly become more volatile if they continue that. I've worked with many companies, and when one gets in a crisis, they will use every resource at their disposal. I can guarantee you there's political pressure on market actors to not start MOAS. Oh, I'm sure. Uh, you know, Kenneth Griffin is a very large donator for every political party, right? They all are. Um, so yeah, I'm sure. Unlikely on SEC GG trying to save them. Yeah, I don't trust the SEC to do. I mean, first of all, they're a civil. They're just like a civil penalty agency, right? They can initiate criminal investigations, but then that goes to other agencies, which no one seems to be paying attention to. Like, has the DOJ opened any cases on, Citadel or the U.S. Attorney or the FBI? I have no idea. Someone else could look if they want. Coworker and I are starting to see some mediocre articles that are positive, but you have to dig. Yes. So yeah, the mainstream like media cycle on GME is shifting, which is definitely a sign that we're entering a period of a run up. I know people like to believe that that is occurring naturally, but it's unlikely. If Motley Fool starts writing positive articles about GameStop, you can bet they're just trying to get on the fence before something happens. That way they can be like, oh no, like we were saying like weeks ago that like, things are looking weird over there. Yeah, they'll release literally an article like and they'll they'll act like they've been ignoring GameStop, but they've been releasing articles every single day about how awful it is. Any ideas on what GameStop will use all that money for? I hope they have some sort of acquisition. No, not acquisition. Not use it to stay afloat until they get online sales up. So they're going to use it to stay afloat until they get online sales up. They're also going to use it to expand their fulfillment network, right? And logistics. This is where e-commerce companies make their money. People think it's the products or the services. It's not. It's fulfillment and logistics. It's taking a product A and getting it in the hands of customer B as quickly and efficiently as possible. This is why Amazon is the biggest. Because they're very fucking good at that. That and AWS. Which is also getting a product to a customer quickly. Just kind of in a different realm. Yeah. But acquisition will be out of the question for a long time. I would assume that news of acquisition is an attempt to get people to do things like buy shitloads of SLGG gaming, right? That's a distraction. It's just like AMC. It's a cheap stock that no one fucking cares about. But no company in a turnaround would acquire another company. Also, $1.2 billion isn't that much. So you're acquiring a shit company if you're acquiring a company at that price. I was asking what you think of RC's strategy will be going forward. Any corporate actions you can undertake to boost the business? I think what I just described is the best and most likely course of action currently. Closing more stores, making the stores that they keep better, like the higher traffic stores, better in every regard. I mean, they could definitely update overhaul the look, and they've announced that they're already doing that. That should probably be their primary focus for right now. More fulfillment centers. They still need to target probably the Midwest for massive fulfillment centers, and then they're going to need smaller ones regionally, right? Like New England, tri-state, like coastal, southern, deep south. Texas probably needs two of its own. California probably needs two of its own. That's where all that money is going to go. You're better lit today. Did you change your lighting? I just have my like actual room light on. Double dipper, average gang unite. Awesome, Starlight. Yeah, also the people at 350 have done something else which should be noted. The people who are locked in their positions at 350, they haven't averaged down, right? They've had plenty of opportunity to do so, but they haven't, which means that they have no desire to invest more money in GameStop, right? So this makes them even more likely to sell when we hit those resistances. Up 230%. It's easy to hold when you're up. I agree. Why short through options if it's inevitable MMs will hedge? Reduce liquidity. You can't short anywhere else. I told you guys that it's life or death for them. They will do anything they can, right? I think a lot of people can't visualize the effect chain of MOAS. Yeah, I understand that. It's far more broad reaching than I think people realize. I think some people realize. I think most of the people here do, but um, I think some people are just excited about the money. I was hoping they would buy Steam in order to compete with digital distribution, have a platform, but they're way too expensive. Yeah, they can't afford Steam. Like when you say 1.2 billion isn't a lot of money, it's like you've already been through MOAS. No, it's just I've been operating like I've spent the last 10 years of my life dealing with finance and financial markets, right? And so it's like 1.2 billion is not a lot of money. I know it seems like a lot to you guys and to most people, but it's just fucking not. Especially when you're talking like institutional finance levels, 1.2 billion is nothing. If you're talking about like one individual with 1.2 billion, yeah, it's a very steady amount of money, but there's more and more billionaires every day. Well, if they're smart, what they'll do is instead of buying smaller fulfillment centers all over the country, right? Like usually people's fulfillment maps kind of look like this. Um so instead of doing that, if they were smart, they could use like their PA location, their Nevada location, and possibly like mid Texas. Amarillo is always popular for this one because it's like right in the center of the panhandle. And then maybe like one for California and possibly a smaller one in like New York or Massachusetts. Um, and then use all their stores as their more local distribution network. You know, they could deploy this strategy very, very cheaply. Averaged up like a dumbass. I mean, if your cost basis is low enough, it doesn't hurt to average up, right? I've frequently thought about averaging like my position up to like 150 because I don't think GameStop's going to get any cheaper than that. Unfortunately, I don't have the money to do that, but I could get margin or loans, I guess. Are you worried GameStop might acquire CX around you? No. Good setup with the stores already there. Yeah. I've averaged down. Nice. Yeah, I mean that shows a commitment to the stock, right? If you've averaged down. Communities like this, I'm going to take hold of whatever downturn happens and try to navigate it to my advantage, and hopefully others are as well. Well, that's the beauty of the markets is that like you make money if you're smart. You'll make money going up. You'll make money coming down. You'll make money on sideways chop, and continue. Um, that's hard to do though. That requires a very specific mindset and probably innate talent. But most people can probably make money going up and coming down if they're smart and careful. They can. I would say the average person can average up their capital. If but risk management is what that's really the censure on that, like trading for the masses philosophy that I might have is that some people, most people, have atrocious risk management and their discipline is absolute garbage. And the worst part is a lot of people don't realize those qualities in themselves and will pursue trading at a loss for a long time. And eventually the market will take all their money and teach them the lesson the hard way. But that's why I tell everyone to paper trade. Merge Steam or Newegg. Engineering needs to beat them, like in customer service and business overall. Is that fair to say? Yeah. GME ideally would beat their competition. That would be their goal. If they run into competition they can't beat, or ideally get big enough that they can buy out incoming competition, like Facebook or Google or Amazon would do, then that's beneficial. But currently, yeah, they're in the stage where they need to beat their competition. And their next biggest competitor is Best Buy, which is not going to be an easy one to bring down. People still fucking shop at Best Buy, man. A lot of people. Best Buy doesn't actually do that poorly. they've closed down stores and, narrowed their business structure, but they've also improved their online sales and their delivery, and they have a lot more capital and money on hand. They also have a bigger footprint. So I firmly believe that that's Ryan's next goal, is to beat them out. Or it should be. Jamie and Charlie get turned away in the lobby of JP Morgan is a good scene to think just how much money is needed for an ISDA, let alone be an MM. Yeah. Thanks for sharing your market knowledge, especially on beautiful Saturday. You're welcome, Jake. Thank you for the donation, man. I appreciate that. I averaged down to 120, back up to 230, and now around 160. Nice. Yeah, I'm sure most of his research and his plan was in place. I think the first part of that plan, the biggest part of that plan, the initial phases we've already seen played out, right? Like, he moved in his own executive team. And he moved out the incumbents. So he got rid of George Sherman. He got rid of everybody, right? Like, that's the first thing you do in a hostile takeover, is you get rid of all the previous executive staff, right? Because their loyalties lie in a different place. Whether they do or they don't, you have to assume that they do. So he's handled that with aplomb. And I expect that his next moves will be equally well thought out. Can you expand on risk management? In what way? Do you have a question on it specifically, or do you just want me to talk about risk management in general? Risk management is just, don't risk money. Like, you don't want to risk more than you can make, right? So if you see an entry on a stock, like, say these are the resistance levels, and you have like a descending wedge. These have a really high breakout chance, right? So you have like a descending wedge, and here's your breakout point, and you've got like a $10 range here, right? But the next, the stock has slipped this resistance before, right? And the next resistance level is down here. That's like, in a trade, this is your risk, right? So this is where you take your money out. This is what you're risking, is that when it reaches the end of that wedge, it could break down to that previous support instead, right? And so this range here, say if that's $10, then your risk is equal to the reward, right? But say that's $20, right? Now you're risking more than you could make. Same goes for options. So if you're buying into an options contract on like that same play, right? And say your reward is $10, times 100, because options. But the contracts, and say the contracts are 200 a piece, right? At your buy-in point, which is here, because you expect a break to the upside. So you're risking $200 for a potential gain of 1,000, right? Per contract. So that's a 5-to-1, right? That's a good risk ratio. In like less swingy trades, like day trading, your risk is based on the capital invested.
So say you put in $10,000 on one trade, right? You have to set what you want to lose. Do you want to lose? Are you willing to lose 1% on the trade? Are you willing like? And this has to do with your confidence in the trade, right? 3%. And then you would set your stop loss at one of these levels, right? So that way, if the stock moves against you, you only lose that percentage of your initial capital investment, right? And this is far more important than making a profit. Profits will come. It doesn't matter. They'll always be in excess of your losses as long as your losses are strict. I wrote the book about you talk about too. So I'm dedicated to learning the ways of the market to better put my money. So it's a solid book. It's take it with a grain of salt. Read it. Take what you can out of it. You know, and use that, but don't base all of your trading on that book. Use that to create your own system of trading on technical analysis, right? So that gives you the groundwork that you need to create your own system. In a way, paper trading will do this much better than the book will, right? But the book gives you an idea of what to look for, a very basic set of principles to pay attention to. You can also read Benjamin Graham's book on value investing. Damn, what's it called? No, Benjamin Graham. Oh, I'm gonna try to find the name of this. Dox myself by opening this. What's the name of the book again? I can't remember. The Intelligent Investor. That's a very good book to read as well. And that teaches you how to do fundamental analysis on a stock. Best Buy sells furniture and baby stuff. Yeah, Best Buy sells a lot of shit. I think Best Buy also owns some land as well. You could if you want long dancing. It's I feel like that's something that would fall on a lot of deaf ears, but maybe. Yeah, absolutely, Alberto. Can you share the name of the book again? Technical Analysis of the Financial Markets by John J. Murphy. That's correct, Monkey Danja. First of all, the book's dated. Um, it was written long before a lot of high frequency trading and algorithmic trading took over the markets. It's also a little dated in the sense that like it was before the retail stock movement. The market's fluid. It's always changing. There's always new things, and so you have to adapt. But it's a solid fundamental understanding of technical analysis. Is that it? Have we run out of questions so soon? I've reached the end of the chat. I'm late to the stream. What's your forecast of the upcoming week? Bullish? Always. No, but we look good. We've got a MACD crossover on Friday. We bounced off the long-term trend again. It looks good. It looks very solid for a push to 225, maybe higher. So we kind of talked about that earlier, Average Monk. I don't know. I'll think about it. When are you treating yourself to a secret lab? I ordered it already. It just hasn't come. It supposedly was shipped, but I have no tracking information or anything. So who's just sort of baked in when RC bought his major position? Our sentiment is the catalyst he was planning on. Isn't the catalyst he was planning on, but gladly leaned into. It's a great situation for both sides. Yeah. Alberto, thank you so much for that, man. I appreciate the donation, dude. Guys, if you're not Dillionaires and you're really super interested in investing, not to push it on you, but that channel is probably the cheapest trading community you could ever find. And, you know, I do try to come in there and weigh in on people's, you know, discussions when I have time. And, you know, I put my picks in there. And so if trading is something that really interests you, consider getting involved in it. I do price it that way prohibitively to keep it smaller. You know, you get too many people in there and it gets crazy, and I may have to move it further up as we go, right? Because like if the channel gets much bigger than it is now, this isn't like anything near term, but if the channel did get much bigger than it is now, I would probably move it, make it a little more of a deterrent to enter. But right now, I think it's definitely enough to keep people out. that yeah, if you can't spend $25 a month on an investment community, you're probably not that interested in trading anyway, because the monthly charges for being a day trader rack up pretty fast. And some communities are better than others. Some are more active. I used to be in a really good futures and like commodities community, and I think that was like $300 a month, but it was worth it. It paid for, you know, itself a million times over. Yeah, if we break 200, well, there's like a curve of volume on GameStop, right? Over these last months, kind of like a bell curve. So volume picks up down here in like the 130 to 150 range, right? And then volume dies off here around 180, as that is the average, right? And then as we cross 220, it picks up again up to about 300, and then it declines into 350 as it gets too a little expensive to FOMO in. But yeah, if we pass 200, we'll be on a curve to hit 250, 300 very quickly. And then, yeah, depending on sentiment, I think we were a little slow last time, as in the media sentiment was against us in the last run up. But if the media sentiment is with us and we're running, that's a recipe for big FOMO.
Class dismissed early due to lack of sleep. I'm sorry for you guys on the West Coast, but Saturday is really my only day to get shit done. So I know this starts a bit early for you. Just remember that, like, you can always come in at the end, you know, and I do try to make sure that everyone's questions get answered, even if it runs a little longer. And then I always post the VOD immediately after on the community tab. If you guys are having trouble finding it, hit me up and I'll link you. But it's always there to watch after the fact if you miss out on it. Chair arrived yesterday and your neighbor's enjoying it. Probably. My Activision calls are for this week, so they're for this Friday. Thankfully, I was going to buy 0 DTEs on Activision, and I could have made money on it, because it did dip, but just to like 90. So its resistance was at 90, and this is its like stock movement over the last like couple of months, and it hit 90. It was like right here at its low resistance, and then that lawsuit information came out about the sexual harassment allegations. And so, you know, I may have jumped the gun a little bit, but I bought puts assuming that it would break through the low resistance. And here's the next resistance down at 70. Fortunately for me, I did buy them for next week. So if we have a market, and what happened is just we had a bull market that ran away, so it went up a little. But next week, as more news comes out over the weekend, I still expect to see some downtrend. I would guess if the market runs on Monday and I continue to lose ground on that, I'll probably just close it up and take the loss. Does the Dillionaire Discord focus mainly on options plays? No. There's a general chat DD discussion. There's day traders, value investing, scanners, penny stocks, crypto options, swing plays. There's a voice channel for you guys if you guys are like teaming up on like something. You know, you can go in there and like in the voice channel and discuss it with each other. I think you guys can screen share in there as well. As kind of like a community meeting room. And if you guys need more of those, just let me know and I'll add them. Any other channels that you guys want, feel free to discuss it with me. I do want to keep the country club like investment focused. And so I will be hesitant to add any like kind of community type channels. I'll probably be adding like a futures channels and a forex one, but those and crypto not really my area of expertise. I know futures pretty well, but I don't trade them very often. They're capital intensive and the risk can slip away from me very quickly. But talk a little about what you see happening post MOAS, market effects, and all that. It depends on how big it gets. If it gets big enough, the economic, like overreaching economic effects could be catastrophic. Overarching. I expect at least a massive correction to the market following MOAS. Especially if multiple stocks MOAS simultaneously, like GME, COS, AMC, BBBY. There's a few other ones that it seems similar entities are short on, right? Your chart is missing. It's not, oh, did I close it by accident? Oh, there we go.
John F. Carter, Mastering the Trade, says one should never buy out of the money options. I don't fully agree with that. So the idea that you should never buy out of the money options plays into like the efficient market hypothesis, and I don't buy that at all. I know that's what they teach in academia, but I think there are opportunities to buy out of the money options, and I think there's opportunities where that's much more risky. It's just it goes play by play. Yes, there are in the money options the delta of 0.7 or better are fine for certain plays, but out of the money options are fine for others. Is it feasible for put buying strategy to draw down the price to continue for the next few weeks? What stops them from just continuing this until their funds run dry? Because like the more they do it, the more pressure they have to apply, right? So, and then the more the market maker has to hedge back, right? And so that means that like there's an increase, right, over time if they try to do that. So like they shorted here, market maker bought back here, right, which pushed the floor up, and then they short again, right, and then the market maker buys back, and then they short again, and the market maker buys back. So when you short this way, the inverse reaction to you shorting that way is always equal or greater, right? Especially with the longs setting up these gamma ramps every week for them to buy into, right? So the market maker is buying into a gamma ramp every week, and that makes it very risky. Absolutely, Monkey. Yeah, I mean, lurk, do what you want to do. Contribute, lurk, ask questions, talk to each other. You know, I do notice that the Dillionaire's Country Club can be a bit quiet. Don't let it be. Use it as an opportunity for those of you that are, you know, more socially outgoing. Try to use that to draw more people into the conversation. You're all clearly interested in the same thing, right? You have that thing tying you in common. Tying you. How do I get on the Dillionaire Discord? Viper, DM me and I'll send you the information. Yeah, also if you're a Dillionaire and you're not on the Discord, join it. Even if you're just a Dillionaire to support the channel, I understand that, but is it feasible for put buying strategy to draw down the price to continue? Okay, we covered that, right? Do they make an overall profit? Generally, no. It depends on what day they're doing it on, right? So put buying on like Thursday, Friday, profitable because they can close the contract on Friday while the stock's down. Or near close on Friday. Put buying on Monday, Tuesday, Wednesday, not profitable. Because if they drive the price down, it's going to bounce into the end of the week. So they have to sell here, which makes it bounce even harder. And since their goal is price suppression, they don't want it to bounce hard, right? So they're probably not doing this at a profit. If they are, it's minimal, but I think mostly at a loss. Definitely at a loss back here when they drove the price down to like 150. and we ripped right back up, these contracts in this range, they definitely lost money on. Don't worry about being annoying with questions or having dumb questions. I feel like this community is tight enough that people, especially in the Dillionaires Club, are not going to be dismissive of you in that way. And if they are, I'll step in, and if you have a question that no one's answering, I'll answer it. Tag me, You guys are, the guys in the Dillionaires Country Club are definitely like my biggest supporters, right? Like I got your guys back. Ask shit, go wild. I'd rather answer your questions than fucking random Redditors or get into flame wars on Reddit because somebody's bashing technical analysis or calling me a shill. Will I be able to trade options when I get my green card? I don't see why not. I think you can trade options from it in America from a lot of countries. Deku. I'm also 95% in on Jimmy, so no money. That's fair. So most of its effects are as much about the funds it takes down and what else they hold as it is about the short squeeze on this one stock. Absolutely. This has broad and far reaching implications. It's definitely not just a short squeeze on GameStop. The extent of it is atrocious. It's just the effects it could have on the financial market based on what they're doing is equivalent to 2008, maybe greater. I'd love to do that, KO, but unfortunately, I have 7 days of content I'm producing. So I really can't do like extra live chats. I mean, that's what this is for, right? If you have a question about forward looking TA, ask it now. The Discord is there for you guys to discuss that among yourselves. I don't have any days off. An Elliott Wave guy, TT. The rebate fees are near -1%, so this adds more loss. No, that's just like about equal to the borrow rate. So if they're using cash collateral and the rebate fee is 1% and the borrow rate is 1%, they just cross each other out. It's free. As long as they use cash collateral. And I wrote a DD about that, Ryan Player. If you want to check that out, it's pinned to my Discord, and there's also a video DD on it in the video DD channel that you can check out after we're done here if you want.
Why else would a company's institutional ownership be over 100%? Have you run into several examples of this? They could have an inside institutional owner, somebody who owns more than 13% of the company, but their shares are locked. So 100% of the float is owned institutionally, and then some of the or 100% of the free float is owned institutionally, and some of the shares outstanding are also owned institutionally. I know I'm not a shill. Using options to push the price down now, would they be able to do that at 340, or would that be too hard? I mean, it's about the benefit of using options is it's about the same to do it no matter what the price is. The problem with pushing the price down at really high levels is that there's very few contracts. Like there's liquidity in options contracts the same as there is in stock. There's only so many available. Right? And market makers have to write options contracts all over the market, skirting their margin requirements constantly, right? So they can't just write excessive contracts. And so when you get to higher price points, the number of in the money contracts decreases. Just an idea to increase activity amongst us on the Discord. Yeah, we could like some kind of like schedule. Maybe like I'll look. I'll talk. I'll think about it. KO. I gotta find a time and stuff to plan that. But fill me in on what ideas you have, and I'll see what I can do. Did the SS mods free the pickle yet? Or are they still? Yeah. So I'm like according to Buy Triangle, who DM'd me on Friday that I'm on the unrestricted list for the auto mod now, so the auto mod won't take down my posts anymore. Wait, Redditors actually called you a shill? Dude, I get so much shit over on Reddit. It's not even funny. There's a lot of people that don't like that I don't confirm their bias or lick Adabit's ass in the crack. Or Creand or whatever. Creand's like fucking 21 years old. I've talked to the guy. He doesn't know that much shit. His market education, he's working on it, you know, and I respect that, but there's a lot of things he doesn't understand. Just none of these people are infallible. Even me, I can be wrong, right? Like, they're just more likely to be wrong. They're all awful. Chris. They're all awful in one regard, and that's like the crazy zealots and like people that, you know, want this to be the next QAnon, and then there's just the apes that are holding the stock and want good information, and that's why I'm there. I don't give a shit about the nut jobs and the wackos. Like that's not why I'm on Reddit, right? I'm not trying to convince those fucking people of anything because they're not worth my time. But for the people that find me, like you guys do, that are looking for, you know, facts in this fucking sea of speculation, that's why I do this. That's why when Warden stopped, I started doing it, because at the time, whatever happened later with Warden, at the time when I kind of took up the mantle from him, he was spitting facts. He wasn't bullshitting people. That changed, unfortunately. He's young, you know, fame got to him, but I
I have tried to continue that to the best of my ability. Wouldn't IV be way higher then? Yeah, IV is also higher. If rebate fees are minus something, I don't think they're minus. Are you sure? Maybe in Europe. Here it was equal. They were like the borrow fees I saw for cash collateral were equal. Usually rebate fees are negative for non-cash collateral assets, right? So usually they're positive. You have a positive rebate for cash collateral and a negative rebate for non-cash collateral assets, or not same as cash. One guy was mad because we turned into the stream we were talking about rice cookers. Fuck those people. You can be wrong, like that 2 p.m. prediction. I mean, that was just for fun. I thought so on that day, which was here. I was seeing if we would repeat the price action from this day. Because the test of like everything lined up, like the early morning test of 195, then we tested later in the day at 2 p.m. and ran up hard, right? You have any thoughts on the TA from Jamie on trade spotting? I've only seen like part of one of his videos. From what people have told me, he seems to, understand technical analysis. I don't know much else about it. He doesn't seem like a shill. I'm guessing he seems pretty true to the course. I think he's a bit more uh, zealotous than I am about equal wealth distribution and some things like that, and like I mean, I am in my own way, but it's different. I think his might be a little more high flying than mine. Mine's more grounded in the fact that I don't put a lot of faith in people, but um, I don't have any problem with him. I was gonna do a collab with him, except I guess he got banned from Twitter. Every time I try to reach out to him, he gets banned from the platform I'm trying to reach out to him on. I watched him early on too. Jump ship the same. You're way better. Thanks. I watched Warden tuned out full course meal. The torture I suffer here is more manageable. You mean my 15 minutes of cashies a day? I came for the GME but stayed for the rice cooker DD. It's negative. It's hard to find shares to lend. I'll ask him next week if it's because non-cash collateral. Thank you for your answer. Yeah, okay. Yeah, let me know, Ryan. Share lending in Europe also works differently as it's disclosed. So it could be extremely hard to get a locate in a European market, and whereas it could be very easy in America because we don't disclose short positions here. So AMC and GME charts are very similar. Is there a delay between the two, or are they getting shorted at the same time? Are they using the same strategies for both? No, but there's other things that link them. Haven't said it in the stream. I don't think you guys would vibe. Don't think he's a bad guy or dumb. Also, he's way into fibs. I've heard that. After MOS happens, you say you want to buy a property. What are some financing options you would pursue? I would probably look to, I would look to get a large single loan for multiple properties at a low interest rate. You have to speak with like a private banker and arrange a loan package, but it's more of like a development deal than like individual home purchasing. At least that's how I'd handle it. That way you get a overall interest rate, right? And then you can decide the amount of money that you need to invest to pay that every month or however often it's due. Right? Because like say your interest rate for the loans at like 3 to 4%. So you can invest X amount of dollars at 8 to 12% in the market and use these gains to pay the loan. Right. So then you buy the property for free over time while netting a profit. And then all the properties are packaged together in the same list. You don't have a lot of separate loans to deal with a different structure. You structure the whole deal all at once. Sorry, this is addressed before. I was wondering why GME spiked when AMC got halted during the last run-up. There's no causation there that you can ascertain. It happened, but like it doesn't necessarily mean anything. Lots of shit happens in the market at the same time as other shit happening. That doesn't mean it's correlated or tied. There could have been overflow from a position being covered that was similar on both stocks, and so one got halted, they started covering the other in order to maintain margin, right? So if they're chasing a margin limit, this is probably the most plausible scenario. If there's like a margin limit, right, and they're covering AMC and AMC gets halted, but their margin's increasing, then they cover GME to bring their margin down, right? So GME is always the last one they want to cover because of its illiquidity and the speed at which the price moves upwards because of the bid-ask spread. So covering on GME is very volatile. So if they can cover every other short position first, that's better. They're into fibs for sure. Fibs are fine. I don't think they work very well. I don't think Elliott Wave or fib works super well on GME, unfortunately. Fibs may be better than Elliott Wave. It's similar, but not the same. Got any good rants? Not today. We're almost done. I'll save those for the week when I'm angry. It's not liquidated also. It's possible, but I think unlikely that smaller. I don't think there's that many small positions left after January. I think only the bigger players really remained at that point. There might be some that have picked up in these like downtrend periods, like from here to here, and then back in March, April. There might be people that came in on short positions, but I mean, the ones in March, April probably got fucking screwed here and got out. You really need a lot of capital to carry that GME as a short. So I highly doubt there's too many that have been involved, too many small funds that have been involved the whole time. Large single reals. You do need a loan. I just explained exactly why, Wedmo Willie. You don't ever buy it for cash. Always use a credit card and always get a loan. Spend their fucking money. Don't spend your own, right? Need options about one GME call it 3080 strike for 917 expiration. I think it's week after earnings. We usually get a run up before earnings. Your thoughts? That seems like a great date. Yeah, I don't see anything wrong with that. That seems like a very conservative, reasonable play, Max. You're welcome, Han. Looks good, Johnny. I mean, the longs are going to keep setting up that ramp until the shorts buy in, right? So that trap's going to sit there in perpetuity. I will tell you what won't happen, though, is the longs aren't going to drive the price up. They're just going to let the shorts do it. Some longs might come in inadvertently into a situation that they haven't analyzed properly, but I doubt it. Maybe like people who don't care and just need to track, like mutual funds and stuff. Summer weeks behind and liquidity decreases. Liquidity will increase after summer into September, October. The summers are a little illiquid anyway, just because, you know, people are away, people aren't really participating as much. Yeah, you got it. See you Monday, man. I guess I'll be watching them on Monday for a SPY dip down. Yep. I have some for August. Also, I will be watching them Monday as well. Windmill. For what's worth, of all the YouTube analysts I follow or used to follow, Uncle Bruce, Trade Spotting, you were on a whole different level, and how real you are, man. Thanks, Alberto. I appreciate that, dude. I do my best to maintain that. What do you think price peaks at during mass? I'm 100% GME, but trying to convince some friends to switch over. Dude, it's really hard to say. I mean, like, when I tell you guys that the potential is unlimited, it really is. I'm not bullshitting you. I'm not trying to sell some fucking narrative. It's like the one thing Super Stonk is right about. That, like, there's no upper fucking limit at all. It's just the psychological ability to hold to that point, which I will tell you right now, 99% of people don't have. But for the ones that do, holy shit, are they going to make a lot of money, right? I hope I'm one of them. But yeah, 10 million, 20 million, 38 million for the last few shares needed to cover is not out of the question at all. Most people will get out at psychological levels, but it doesn't matter, right? Because the float is sold so short that they can't, no amount of paper handing can slow that progress. Meant to tell you that there was a short case article on Seeking Alpha. Guy said he's probably going to go short again. It's about the shilliest thing I've ever read. I know what's his face was going short on it for a while. The Pimco guy. He's a prick. I met him. God, what's his name? He lives in like Newport Beach in California. He's an asshole. All right, good windmill. See you Monday. It won't finish on a single day, YMAA, but we could hit near the peaks in a single day because of gap up potential. We actually have a gap up here that could be expected as well, from like 215 to like 230. And here again at like 281 to like 290. So we saw some gap ups on the last run. It's not unreasonable that as the price progresses above 350, that those gap ups wouldn't be more frequent and larger in scale. If you need help with publishing videos, let me know. I'm not a pro, but can help if need be. Thanks for that. I'll definitely let you know, Yeti. Thank you so much, man. Imagining how high the price would go if everyone actually has diamond hands. I don't try to think about that scenario, right? Where like 90% of apes hold. I mean, I hope you guys do. I hope you guys have been. I hope I've given you guys enough that like you're able to operate and navigate this properly, right? But like, I assume, and for the future of the financial markets, that 90% of people would be out by like, I don't know, 100 to 250K. Because if these 90% of people held to 10 million, I don't know if there'd be any place to spend the money, right? Fortunately, the psychology is very much against them. I hope you guys are part of the 10%, right? That's what I do here is I try to and statistically 1% would be near the peak, and then like 0.023% would sell at the peak. Shows what he plays. I think you said it needs to hit and hold 340.50. Just curious if that's still your opinion. I think it needs to break 350. I don't think it needs to hit and hold. I think it needs to break. I think we need to probably cross this upper range limit on the ascending channel. I mean, the way technical analysis works, there's a chance that this is, in fact, the margin call territory. But there's another resistance there, but we'll see. I mean, we know that 483 in January was below their margin call, right? I think yeah, Bill Gross. I think you guys are maybe don't realize like how much money these guys have. It's a lot. It may have gone down a little, but we don't know their borrower agreements. How long will it take the DTCC to know if they bought a synthetic versus real share during MOAS? It's milliseconds. It depends on how closely they're working with seed, but yeah, milliseconds. I bet it's when he sold only one share at the peak. Maybe. You have to remember at like 10,000, DFE is very, very rich. At 50,000, he's like the richest man on earth, right? Dude's got diamond hands, don't get me wrong, but turning down Jeff Bezos money is like, that's rough. All right, guys. Thank you so much for tuning in this week. I appreciate it. And thank you for all the support from all of you guys. Keep an eye out for the video DD tomorrow. I'm going to try to release maybe some more DDs this weekend, maybe some like extra videos and stuff. So keep your eyes open for all that. I appreciate you guys, all of you so much. Thank you, and have a great rest of your weekend.